Everybody, it is Friday, the 20th of September. It's hard to believe this month is about over. I hope your week has gone well as we are preparing to move offices today. So a big day for us. Moving just around the corner, not too far away, which makes it even more difficult for those that have moved like right next door before. So the closer you are, the harder it is. But glad you're with us today as we get ready to head into the weekend after the big rate cut. Great day yesterday, hitting all-time record highs. And we'll talk about those things and more when Dave joins us here in just a few seconds. Before we do that, let's not forget, though, that there are so many things in this world that you and I, we have no control over. However, you can take control of your investment portfolio by knowing the amount of risk you have and knowing and making sure that it matches up with the amount of risk you should have in your current portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
5.7 Light FM. You've been talking in your sleep again, have you? I hope you didn't give him your credit card number anyway. It's 8:42. Let's check in on your money and see what Wall Street's doing this morning. Yesterday, it was like a New Year's Eve party all of a sudden. Figured it was alternative number one or alternative number two reaction to the Fed's interest rate cut. It was alternative number one. We got a little dose of a low interest rate high. Let's see if we can keep it going. We got Phillip Statler on the line from Statler Financial Services in downtown Sebring. Everybody's happy this morning, right, Phillip?
Hey, it seems to be. Well, at least yesterday they were happy. Today it's more of a mixed bag as we move forward from where we were. And so we continue to see how that drop in interest rates, how it's going to affect the market long term. Because when we look at reports today, we've got some, people's profits aren't what they were last year. So we're seeing some diminishing returns when it comes to earnings.
And that was something I was mentioning last week, that the economists are saying that, the S&P 500's profits for the upcoming quarter not expected to be growing, and some of them are actually shrinking, which kind of means that high we got yesterday may have some difficulty sustaining. But to set the table, we set a new all-time record high for the Dow yesterday. It was up 522 points, up to 42,025. Standard & Poor's hit a new record high. It was up 95 points yesterday. That's 1.7%. And NASDAQ went just absolutely ape crazy, up 2.5%, gained 441 points. It's not quite up to a record high, but we're basically a driver and a 9-iron away from there as well. So, it was without a doubt a darn good day on the equities market. Shared with you this morning when we got on the phone the monthly projection from the various brokerage houses and banks, how they expect the S&P 500 to end, following up on that interest rate decrease. The highest projection right now, the people at BMO. What does BMO stand for? I don't recognize that firm.
I can't remember what
Not
that
sure.
was.
Bank of Missouri or so, I don't know. Anyway, they're suggesting the S&P is going to end up the year now at 6,100. Evercore, which I've heard of, expects 6,000. It goes straight down the line until you get to good old conservative J.P. Morgan, who still thinks we're all going to die and figures that the S&P is going to finish the year at 4,200.
That's a pretty wide gap there, isn't it, between the high and the low?
Yeah, I share those numbers just on the grounds to emphasize that nobody really knows what the Sam Hill is going to happen. You and I were kind of looking at the interest rate decrease yesterday and saying the market could react in one of two ways. Either the Fed communicating, like former President Trump was saying, that half-point drop indicates we're really in deep doo-doo somewhere, or that it's time to ease up on things and let the economy grow. Evidently, at least yesterday alone, investors figured that it was a good sign, and Paulson did a good job pounding the podium and saying that, no, we're in great shape and it's time to ease up. Let's see if he's right?
Well, that's exactly right. We'll have to see whether or not we can continue on that path. And, it's a lot to be seen yet before we get to the end of this year.
Yeah, and the dot plot that came out of yesterday's meeting I found kind of interesting. The dot plot from the Fed governors that have a vote suggests the central banks will cut interest rates 2 more times this year, both by 25 basis points, which means by 12/31 of 24 will be 1 full interest point down on that reference interest rate. It's already reflected a drop in the average mortgage price. The average mortgage price being offered now for a 30-year mortgage down to 6.09%. That's after only 24 hours since that interest rate cut. So the effect is already starting getting felt.
Well, it is, and we'll see how that relates to housing. I was looking at the number from yesterday. Existing home sales were just slightly off from where they were expected to be, and slightly off from where they were the month before, but not enough to really affect anything. And then the U.S. leading economic indicators have actually improved. They were a -0.6% last month. They're came in at a -2% this month. So some improvement there, Dave, on the economic indicators.
And frankly, housing with decreasing numbers on existing home sales, that can't hurt a bit with the decrease in reference rates. Car purchases also ought to be helped. And there was a poll out from the automotive research site Edmunds said that 62% of car shoppers are holding off on buying their next vehicle because of, drum roll if you please, higher interest rates. The car dealers can't be complaining about that either from the other day.
No, they can't, as long as the banks drop the interest rates, and that'll make it a little easier for people to buy stuff.
It actually, and there is some headroom in there down the line. I was whining about a year and a half ago. I bought a new car, and okay, at the risk of sounding like I'm bragging, my credit score at the time was about as good as you can get, and I was still paying like 6.5% interest on a new car. That was almost half again the interest rate I was paying 3 years earlier when I bought. So yeah, there's some headroom on the interest rate that could afford to go down. But if it does, it'll help the car sales as well. There will be some short-term benefit for this. Nobody doubts that.
Well, that's right. There will be. The question is, what's going to be the long-term effect? And we just won't know that, right? Because we still have an election to get through. Before probably the next opportunity for them to drop rates again was, I think, November, after the election. And to a certain degree, it'll be too late for people to make a change at the voting booth. And so now we're sitting here with, what does this mean? And if they drop interest rates again in November, again in December, like people think they're going to do, I mean, that's 1% all this year. That's a pretty quick reduction in interest rates. And I just don't know that they've got inflation well enough under control to let that happen.
You and I have talked about this now almost ad nauseum. I don't think inflation is going to be easy to get back down to the 2% rate. I'm looking at the money supply, and when you reduce the interest rate on the reference notes, we're also that has the net effect of pumping more money into the economy as interest expense goes down on all those renewable bonds and everything that happen. Basically, I'm seeing this being they're settling for 3% core inflation. That's the real long and short of it, to my mind.
Exactly. I think that's the case. I think the Fed is changing the rules here in the middle of the game, and I'm not sure I like it.
And they aren't going to say it per se, but I'm saying they're settling at 3. Other tidbits going on today. The word is out of T-Mobile anyway that as far as Apple is concerned, pre-orders for the iPhone 16 better than the iPhone 15. We had some twittering going on that Apple had been disappointed in the initial interest in the iPhone 16. T-Mobile, at the very least, is saying their sales are up over the 15. I get mine in the mail today, so I'm kind of interested in seeing what it looks like.
Well, yeah, it'll be interesting to see, because you're right. The initial word is that at least from the other providers that the orders weren't coming in as brisk as they had hoped.
Yeah, and that was responded to yesterday. Apple said they were going to be working real hard to push the artificial intelligence features in Siri out even faster. I'm fully expecting to probably see a beta version of that coming out on my phone almost as soon as I turn it on this evening when it comes into my house, because it's selling a phone without the big selling point feature on it for a month or so.
Yeah.
Who would be surprised about a cool reaction to that, huh?
Yeah. Well, why not just wait, until until all the goodies are available and then go get it?
Yeah, I would think it'd be a lot more exciting if you could actually have Siri speaking in plain English from the moment you turn a new phone on. But Apple decided they'd try the hardware thing first with all the camera enhancements and see if that would move people along. With all the camera enhancements they've had, I think they would have learned that doesn't do a lot of good. Earnings season pretty well over, but there's still some household names that are coming out. One selling households and the other transporting junk to households. How did FedEx do anyway?
So FedEx, let's just say they missed across the board. Earnings,
Oops.
revenue, to the point that they're getting beat up pretty bad this morning, down almost 13%. And that's like almost $39 a share that they've lost this morning. And it's affecting everybody else in that business too. UPS is down about 2.5% this morning on that news. So they've revised obviously this year lower. So not really good news for FedEx.
Did they say what cost them the miss this time around? I mean, there's.
So one of the things they did say was that the type of packages they are being shipped are on the lower end of the price scale.
Mail order weed. I get it. Okay.
So yeah.
Okay.
So then we move on to some real estate, right? We go to Lennar.
Yeah.
Lennar had a really good quarter. I mean, substantial quarter. They earned $4.26 a share versus $3.63 a share. A big deal. And revenue about $1/3 billion more than expected. But yet, and I can't figure out where this has come from, but they're trading down almost 4% this morning. I don't have anything about their expectations for the third quarter. But there must be something in there the investors aren't liking. They must have pulled back a little bit on what they thought they were going to be able to do because, like I said, to be trading down 4% on these numbers, it doesn't make much sense.
Yeah. The fact that mortgage rates dropping, I would expect a home builder to have a pretty good guidance figure as well to look at. That's interesting.
Yeah. I want to mention one more for you.
Yeah.
This isn't an earnings, but it's a shift, and it's because Nike's been getting beat up a lot lately, right? And so their current CEO is stepping down. He's going to retire, and they're bringing back a retired CEO, Elliott Hill, who is coming out of retirement to take that position. I'm going to tell you, the shareholders are loving it. It's up 8.3% this morning.
Nothing like firing the CEO to improve your stock price, right?
Yep.
Resetting the table, it was party time in the equity markets yesterday. 45 minutes before we open this morning, what are we looking at?
Hey, we've got the Dow's the only thing that is in the green right now. It's only up about 0.1%. Everything else is down. The S&P 500 is down a little less than 0.1%, as well as the NASDAQ 100. On the other side of the coin, we've got silver, though, trading up 1% to $31.73 an ounce. Gold up 1%, $2,641 an ounce. Crude oil down 0.5%, but still not where we want it, Dave. It's at $70.75 a barrel. You need to start working on that, buddy.
And I need to put off refilling my car until it goes down again. Overseas markets, the Asian Rim market, everybody was up off of the good time we had yesterday, except for mainland China, where they're still in really crabby humor over an off economy there. The mainland markets were off, but the rest of the Asian Rim markets generally had a good day yesterday. Europe is kind of reacting the opposite, more with our option two. They were all off about halfway through the trading day today. The average European equity market is off by about 0.75%. A lot of that is disappointment on the central banks over there, not following our bank's lead and dropping interest rates over there. Bank of England declined to drop theirs the other day. European Central Bank also said, yeah, we're holding steady, and that has European investors on the crabby side halfway through their day today. Getting a retirement plan together counts a lot at whatever age you're at. How do I get a hold of you to get a plan for my retirement, sir?
Dave, planning is what we do. That's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning, or Monday morning, about the same time, with a look at what's happened over the weekend and what's likely to affect your money next week here on Light. Phillip, I'll see you then. Have a great weekend.
All right, buddy. You too.
Thank you. And 105.7 Light FM back Monday morning here with more finances. That's Statler Financial Services and Phillip's and Light 105.7 Light FM's Phillip Statler.
Do you actually read?
Hey, folks, again, I want to thank you for joining us today. Hope you have a great weekend. Look forward to speaking to you again on Monday. Till then, have a great one. Bye now.